Today we're talking about VA loans. That's the zero down loan available to veterans and believed by many to be the best loan out there. Not everybody feels that way. If you've watched my videos, I quote Dave Ramsey a lot because I like what he has to say about most things. He's very critical of VA loans, and this is one of the rare times I don't agree with most of his criticisms about VA mortgages, like this from a recent
to do that if it's either through the VA loan or through the FHA loan.
Okay. Neither.
After writing all this out.
Okay, here's the thing. Neither. Both of those are the most expensive loans. The VA is the most expensive conforming loan unless you're a disabled veteran. The fees and the gotcha things that they built into it make it
okay. So, first issue. Lumping VA and FHA loans together. FHA loans are not zero down loans. They require 3.5% down, and they require PMI insurance for the life of the loan. VA loans do offer zero down mortgage loans, and they do not require PMI insurance, and that could be a savings of several $100s a month. PMI, private mortgage insurance, is required for any mortgage loan where the down payment is less than 20%, except VA loans. So that's a great benefit. And as far as interest rates go, the rate you pay for any loan, including VA, is going to be related to your credit score and debt to income ratio. But all things being equal, from what I've seen, VA loans rates are usually slightly lower because the VA backs part of that loan, 25%. So if you foreclose on the VA loan, the VA will pay the lender 25%, which makes you a less risky borrower. It's also easier to qualify for a VA loan. Another good thing about the VA loan is the ability for it to be assumed by anyone, regardless if they are in the military or not. So when you go to sell and your rate is lower than the prevailing rate at the time, that's going to be a good selling point for you. Also, you can opt for an interest rate reduction refinance loan, and that can potentially lower your rate. And that's going to be a really streamlined process. They won't usually require an appraisal for that. The big drawback of the VA mortgage loan is the funding fee Dave Ramsey talks about. And with that, you'll pay that unless you have a disability. And that fee's pretty hefty. It's based on the amount of the mortgage loan, not the sales price of the house. So if you put money down, then the percentage of the funding fee goes down. If you put no money down, the fee is 2.3% of the loan. 5%, that drops to 1.65%, and 10% down or more, it drops to 1.4% of the loan amount. So for a $300,000 house, if you put zero down, you'd pay $6,900. 5% down, you'd pay $4,700. 10% down, $3,780. You can pay that up front or roll it into the loan. So that funding fee is pretty high, really too high, if we're going to call this loan a benefit of serving in the military. Another piece of advice Dave Ramsey offers about buying a home while in the military is to avoid buying a home in a small military town, because chances are you won't be there long enough to build up any equity if that market doesn't have much appreciation. But if you are an investor type, those homes do make great rentals. There's always plenty of military families looking for rentals. If you are planning on buying a home with the VA loan, you'll need to find a lender familiar with the VA process. The VA doesn't do the loan. They work with the lender to process it. If you are looking for a good lender, I can send you a list of names we've worked with. Our contact information is below, so let me know you'd like to have that and I'll send it to you. Dave Ramsey's philosophy is very conservative and risk averse, with the goal of becoming debt-free, including waiting to buy a house until you have a substantial amount of money saved and have paid off all your debts. And that is a great philosophy. But I tell you, Many people don't have the kind of income to pay rent, food, utilities, and save a good bit of money, especially with inflation so high right now. And there's too many benefits to owning a home to wait till you reach that position. And unless you have a really good income, that may be a long time or maybe never. One of the big benefits of paying a mortgage rather than rent is that a mortgage payment doesn't go up every year as rent often does. So it's a hedge against inflation. If you pay $1,200 a month in rent over 2 years, that's $28,000 you pay towards someone else's equity instead of applying that toward your own. So done responsibly, buying a home is a good move. It's not a good idea to take on a mortgage that is greater than 28% of your income or have no savings at all. But taking advantage of loans that allow you to buy a home with zero or small down payment is a good move if you do it responsibly. We have a relocation guide you can download if you like. It has information about all 3 counties up here, along with some practical things like how to register your car, contact information for schools, medical resources, that sort of thing. The link to download that is meetmeinthepanhandle.com/relocation guide. And the video over there on the right has more information about this area and the 3 counties, what they are like, and just so you get an idea of what it's like living here, see what's a good fit for you. And I thank you for tuning in, and I will see you next week. Have a great week. Bye.